with us now. Ajay Bagga and Amisha Vora join in, and Sudarshan is back with us as well. Good afternoon to all of you. Do you agree with Ajay's take on what 2015 will bring us?
So yes, on the global front, I think that not only what Fed does is going to cause more volatility, but it will be accompanied by, our interest rate table finally reversing, which means that the carry trade, which brings a lot of money on the debt side, might get compressed. So the brunt of that will maybe felt on our currency and in turn market. On the other end, for last 6 months, we have been waiting and waiting for that swift, decisive action. And probably next year will be the year, starting from now on, that we see some impact of the decisions being taken. Also, interest rate outlook for India being so benign, including inflation, that domestic economy will start showing some initial signs of proper, strong revival. So I think we will be well juxtaposed with improving fundamentals domestically and global factors causing volatility. So we are in for good times, but with volatility.
All right. So what does an investor do then, Amisha? How do you approach this market here on, given that, you need to sort of be optimistic and bullish and yet play it very safe?
But when you say investor, then I clearly feel that equity will be the class of asset you need to remain disproportionately invested in. There is no doubt about it. When I say volatility, which means that the traders will have to be more cautious about coming here, because as far as last 6 months were concerned, the markets were almost one-sided, or last 6 to 8 months rather. Maybe next year we may not find equally one-sided market. There will be larger pockets of volatility and bumps. But two other important things which I think will play a very important role is that disposable income in the hands of consumers at large will increase, and we will start seeing that impact positively on all domestic consumption, because this will be aided by that the entire commodity and which will leave us with not only lower inflation and lower interest, but lower spend on so many things. So I think we will be in as an economy for much better time, and investors should stay put in good quality stocks, no doubt about it.
Okay, by the way, the Nifty has recovered a bit, and all thanks to ICICI Bank moving back in the green. So from intraday lows, that's a stock which has recovered. If you see the intraday chart, that's now back in the green and is helping the market a bit in whatever intraday recovery that we have seen. Sudarshan, a word on Dr. Reddys. I don't recall the last time when Dr. Reddys was down 13% in a month. What's happening to the charts here, and what's the call here?
Well, the charts are suggesting a lower highs, lower lows pattern. In simple words, it means that the intermediate trend is now down. Small rallies have been sold into, and the declines are much larger. So as of now, I have no idea why this is so. There is no trade on the buy side, and you cannot short sell Dr. Reddy, so it's an avoid.
And is that true across pharma, or is Dr. Reddy an exception?
It's an exception. In fact, Sun Pharma, Cipla, Wockhardt are all buying opportunities.
So it's more the Russian game. So whoever has Russian exposure, and then if a junk rating comes in, so you don't know how far. I mean, there are commentators who are saying how big is the Russian reserve actually.
But
is it 400?
And today you have the Canadian.
Is this an overreaction? But Ajay,
nobody knows. How much you saw ruble going all the way to 80. So you can't really say where that Russian economy is going to stand. 50% GDP is oil related, and what's happened to oil. So, and it's in nobody's control. It's not something. So if they're moved in and put in capital controls, then you could say, okay, this is the damage. Now whoever is in, they can't go out now, so they have held it. So, but clearly Russia is trying to defend the currency using the reserves. That, if somebody can keep shorting you, and so being a long player, we saw that with Soros and the Bank of England, he broke the pound. So it becomes very difficult for central banks.
That's interesting, because the cross-currency factor is even impacting IT now. So this erstwhile safe haven of IT pharma, do you think that's no longer there now?
See, IT, I like IT, and frankly, I think if we could have a change of mindset in the managements, you're sitting on so much cash, if you just analyze, say, a Yahoo abroad, Yahoo has bought about 100 startups in the last 2 years under Marissa Mayer. You are sitting on so much cash, and what these guys doing, Facebook paid $10 billion for WhatsApp with $100 million of revenues. They are not mad guys. They just keep competition out of the market by keeping on buying, and they keep going up the value chain. We stayed a body shopping and offshoring a low-cost provider. We have not really moved up the value chain. I think that is the big change Indian IT has to make. I would still be a buyer of Indian IT. If nothing else, it gives you a hedge against a falling rupee. So keep Indian IT for that and stay in the top end. But I think a mindset is needed in terms of...
What would be a better hedge, IT or pharma?
Pharma, then you have to really watch out. See, IT is largely, Menaka, it's US. So you're quite okay.
Pharma is sometimes dispersed.
Pharma, you don't know. I think Russia, none of us knew till this happened that how much was the Russian exposure of whom. We never used to really track that.
Now, what looks, since both Amisha and you have struck a cautiously optimistic, if I can use that horrible phrase, note for 2015, what looks interesting to you in terms of where values or where prices have come down considerably over the last month or so, and now these stocks make for promising buys?
Yeah, see, where you see value is infrastructure. Quite clearly, but or metals, for example. But metals you would not buy. I think the commodity cycle will take time, and really China is the monster which gobbles up 40% copper. And if Chinese housing starts are not there, then copper is not going to be used, or iron ore will not be used. So Australia, the biggest producer of iron ore, is talking of $63 iron ore level. So value is there, but I don't think there's growth there so that you can really own them. I would say infrastructure with a one-year perspective as a contrarian bet, because this is not going to come in. The economy is at 70% capacity utilization. You have cement running at 50, you have thermal plants running at 60%. So a lot of capacity, and that is the operating leverage also. So if you see the companies which without adding any more fixed cost, just on the margin can produce a lot more if the demand comes back. So I would say you're safer in banking, and within banking, because of various reasons that PSU banks have done very well this series, but I would still say private banks might outperform. And second would be auto. I think that will be a natural beneficiary, falling oil price, falling interest rate. And then you could also look at certain India-specific themes, for example, you could look at some FMCG, again, specific FMCG. They are very highly priced, and then IT I would still remain invested.
Okay, we'll try and get some more stocks from both you and Amisha, but markets have closed 81.86 on the Nifty. That's an 80-point cut, almost 1% lower. The Sensex down 1% as well, 276 points lower at 27,229. The stocks that didn't do very well in trade today include big names like HDFC, Infosys, Lupin. You had ONGC. All of these stocks were down about 2% or so. Most of the IT pack was lower, with the exception of, I think, HCL Tech. So you had Infosys, Tech Mahindra, TCS, all closing lower in trade today. Wipro down 1.5%. Auto stocks didn't do very well in trade either. So there was more red than green on the screen today. And in the green, you had cement stocks that did very well. Ultratech Cement ending the day about 3% higher. Then you had Ambuja Cement up about 0.5%, so it gave up quite a bit of its gains. A few financial stocks doing well. ICICI Bank up 0.3%, Bank of Baroda up 0.5%, and then some metal stocks that did well. So Sesa, Tata Steel, and I think we had Jindal Steel and Power also ending in the green, NMDC ending in the green as well. Motley bunch of stocks that did well in trade today.
Indeed, Menaka. Before I go to Midcaps, just a word
cash
on
volumes in the last
cash volumes were high, Senthil, 22,000 crore.
I picked up in the last 1 hour.
50% of that came in the last 30 minutes of trade. So that's important. And second important point is that Friday morning, don't be surprised if Nifty has a 70-point gap up straight away, because what happened between 3 to 3:30 was
purely
just pure expiry adjustment, and a lot of smart money actually, just trading and catching the screen right and getting the trade right. So it just played out. And on Friday, there's a good chance that the market sees recoveries. On Friday, you don't unlikely to have any kind of negative global cues as well.
Okay, so since not much an investor can or a trader can do between today and Friday, so he's not going to be able to take advantage of the gap up opening. What does one do, Sudarshan, if Friday opens gap up?
Now, if Friday opens gap up and stays there, I mean, consolidates at higher levels, then there's a buying opportunity for anyone who's got stopped out today or who hasn't actually bought and is lucky enough then to buy into this dip. The trend is up. I have no confusion. We have 8100 as a benchmark. It is below that we start saying, okay, don't buy.
All right, let's just do a quick recap of mid-cap stocks as well. But the mid-caps actually did well today. If you see the top 10 stocks, the advanced decline was 8:2. JP Associates, Unitech, you had Opto Circuits that did well, JP Power did well, and a couple of other stocks like HDIL, HFCL, they did well. Gen Irrigation as well was on the upside. Only GMR Infra and Voltas were the prominent losers, down about 3 to 2% respectively. So that's for the market today. Amisha, a word on the earnings season, because there's likely to be some disappointment for IT, maybe oil and gas. Could that be a bit of a trigger for the markets to correct in January?
So on a very, from trading perspective, yes, the earnings season will be nothing great apart from the commodity-led loss or currency-led, adjustments. I think even the demand side was nothing great during last quarter. So results will be nothing great to go by, but all eyes will be set on railway budget, and of course the global events, the way they unfold. So this will be important, but not a great determinant of the direction of the market for sure, because we know the ground realities have hardly changed till now.
Okay, Sudarshan, so from long trades, you had recommended ITC earlier, but aren't you disappointed with the way it shaped out? It was higher at the start and then was one of the weakest stocks. Do you get a confidence that the correction is over in ITC, the mid-series correction that we had?
See, it's difficult to say based on what happened today. So we'll just have to wait for Friday or Monday and see. ITC is in a narrow trading range for the last 5-6 days. In a bull market, a trading range normally resolves itself on the upside. It may not. So today's price action in the last half an hour doesn't disappoint me. But if this persists on Friday or on Monday, it would be very disappointing, yes.
Okay, Ajay, so what's the best way to play this market now? Stay with the leaders like banks, or get into IT, get into some other sectors, domestic cyclicals? For 2015, what would be the story?
Yeah, I think banks to start with. Then in cyclicals, auto looks good, and I think commercial vehicles there will be a turnaround. And then again, IT, I'm convinced. I have been quite vociferous about plugging for IT, despite the kind of analysis we are seeing. Well-run companies, good for minority shareholders, and we have to move on to the next stage of our evolution as an IT nation. I think so. The bigger companies will be beneficiaries. Midcaps, Anuj, very difficult to pick. So for the lay investor, I would say probably played through the mutual fund route. So pick up some good performing midcap funds and own it through that, because very difficult to say why midcap moves the way it does, especially on thin volumes. So, or otherwise, if there are good companies, good cash flows, and you're convinced about it, good for
You mentioned FMCG, Ajay, when we were talking earlier.
Yes.
Which ones do you like specifically in FMCG?
Yeah, I'm not talking stocks.
Stock
now,
specific. Okay, sorry. Because of SEBI.
Yes.
Okay, all right. Okay, no problem.
We're all constrained.
Okay. Amisha, what looks promising to you in 2015? You said if you've got some solid blue chip stocks, stay invested. But where do you think that fresh money could come into?
So I think it appears as what I hear a pretty consensus call on financials, but I think that would definitely be one of the space which should benefit not only from the interest rate cycle reversing, but for example, if you try to understand what this coal auction would mean, almost all thermal power plants who were under any type of question mark about their life, their utilization, their sustainability, all will come to an end. So that reflects in the bank's balance sheet also, because all of them have 70% banks funding. So like that, as one after the other sectors start getting revived, I think the biggest kicker will be in terms of asset quality, pains settling down for the banks. And the third important point is that the credit growth is so pathetic at the moment. Sometime third or fourth quarter of 15, I think the slight revival in credit growth may also start. So all put together, I feel financials definitely, and within that we recommend ICICI Bank, and in the smaller pack we like Federal Bank a lot.
So where would most of your money go in financials? Would it go to the large players, which some would say are looking more expensive, or would you, or are there smaller players you think may give you better returns?
I think smaller players will also give better returns, particularly where the management quality is also very good, like Federal Bank or some NBFCs also. Because, you know, it will be this, I feel 2015 will not be a year of only FII-led investments, because the cycle has turned in terms of mutual fund inflows, in terms of retail participation, and most likely insurance, which has been a seller throughout 14, and we will continue for beginning of 15. But second half of 15, I think their corpuses which were shrinking will stabilize to start participating positively. So when you have domestic money also and better understanding of markets, some of the good quality mid-caps also participate well. So I think even there you will get good appreciation possibilities within the financials.
Okay, Amisha, we've got just a few seconds left at the end of this debate. So any stocks or sectors that you would like to add to your to-buy list?
So we, of course, have a slightly larger buy list, but just to add that in the slightly not so very well known, because there is always an Infosys and there is always an Ultratech in the buy list, but slightly not so very well known, KPIT Cummins is within the mid-cap space that we like a lot. We think that is shaping up well. So also is the, some of the stocks which are going to be very directly related to the minings or transmission and the kind of action which we see unfolding. So within infrastructure, a good balance sheet is Ashoka Buildcon. We like Ashoka Buildcon. We like Action Construction. So these are some of the non so very well-known top-line stocks which are under our mid-cap buy list. The top pick stocks definitely cover Infosys, as what I said, as also TCS, Ultratech, ICICI, SBI, so on and so forth. Thank you.
All right, Ajay, Amisha and Sudarshan, thank you very much for joining us this afternoon. A very Merry Christmas to all three of you, your families and your teams at work. Thanks very much for being on Closing Bell. We're now going to take a break.
Thank you.
Thank you. And one more airline shut down, another struggling for survival. It's been a tumultuous 2014 for the aviation sector. We've got a special report on the year that was for aviation. Stay right there.
CNBC TV